when we talk about IGF being a place where things get done, I think the signing of those MOUs and what we just heard there really is testament to getting stuff done. This is about India being open for business and making sure that that business is done. We don't just talk about it. Things happen here. I'm aware there's a little gathering at the front, so I will persevere nonetheless while that gathering makes its way out. And I hope that so far today has been fruitful. There is so much ahead at our IGF forum today. And I just want to explain a little bit, if I can, about how today is going to work. We're going to have 3 different forums for you today. There's the Global Investors Forum. We'll kick that off very shortly. We have the Tech Frontiers and also the Making Waves Forum that will focus a little later today on entertainment and arts. And so I want to kick off the Global Investors Forum first of all, and no prizes for guessing what the theme is as we discuss what investment means in India right now. We're going to look at Trump, tariffs, and turbulence. It will be the key issue that defines not only this conference, but many more to come. There is a lot for us to discuss, as you would imagine. And I want to start, first of all, with a look at IPOs, at capital markets, and the future of Indian finance. And just while we set the stage here, quite clearly, the stock market is where investors will get involved in the growth of India, but it is also about making that capital available for some of the projects that we've talked about today. And I want to get a sense of what the turbulence of the last 48 hours really means for India and how it will redefine India's place in the world. And so please put your hands together and welcome my guest, Ashish Chauhan, who's the MD and Chief Executive of the National Stock Exchange of India. Nice to see you. Please take a seat. Ashish, thank you so much. It's good to have you here. Please take a seat just while we reset the stage up here. Thank you. Thank you so much. Wonderful. Thank you. I'm delighted to have you here. There is so much for us to talk about, so let me jump straight in. And I want your assessment, if I can, first of all, on what the last few days mean. Let's rewind a little bit here, because I think we've sort of jumped ahead and we're looking at the implications, and all of us at this stage guessing about what might happen next. Maybe give your assessment of how we have got here. Why do we find ourselves in this position?
In a way, where we are is a continuum of the past. And in some ways, the genesis goes into multilateral systems. Post, literally 1970, America was trying to win away China from the Russian orbit. And that's where they sent Henry Kissinger in 1970, 1971, through Pakistan into China to talk to them. China was very insular. And since then, China was mollycoddled by Europe and America to ensure that they break away from Russia, which they did. In some ways, at least the Americans thought. And so that's how the Berlin Wall fell and the communism is supposed to have fallen. But China created a different type of communism, which was what I call mercantilist communism. And it's, for me, China is one company, not one country. So that's how they behave. But effectively now that US has woken up and figured that in last 35 years post, last literally 1987, so almost 40 years since Berlin Wall fell, it was the rich country which other people were leeching on, specifically China, but even other countries which were also rich, like Europe and all. And now America is feeling that we have become slightly poor. And so each time when you want something from America, they're asking back something. And now people think that it was their birthright to leech on America. And it was America's duty to take care of the world. Suddenly when America asks for something in return, everyone thinks it's a blasphemy. And that's where I think we are into what I call, we have, for me always, the geopolitics, it's economics for breakfast. So when all the analysts and everyone starts talking only economics and they don't talk geopolitics, this was somewhere coming. It's just that it took so long, right?
But President Trump's rhetoric is, as you say, that for too long the world has leached off America's success. America's done pretty well out of this, though. It's the world's biggest economy. It's one of the richest nations. You know, there won't be a lot of sympathy for America's plight, will there?
Absolutely, but the way we look at, or the Americans look at us, they've lost jobs.
Right.
The West and East Coast, I think, have done well, which are trading people. The manufacturing people have lost jobs. And in the process, over the last 45 years, China has got almost 35 to 40% of all industrial activities in the world. They have killed American industry. They have killed even European industry. And naturally, India was also suffering due to that. And now, people who have lost jobs are coming back saying that you are teaching us globalization, but we are not the beneficiaries. There are people in America who are beneficiaries, but we are not the beneficiaries. So what about us? And in democracy, this kind of frameworks keep on coming. It's surprised that it has come after so many years.
It's how that wealth has been spread out maybe in the United States, isn't it? And so what you describe then is an end of multilateralism, the idea that the world will succeed by sharing, open borders, free trade. Is it your view that that is done now? That is over?
Yeah, broadly for me, the tectonic plates are shifting. The quakes are going to happen. The multilateralism is over. But anything to start with WTO, WHO, everything is gone. Similarly, United Nations, all of them are going to be, because they are living on the largest of US. Now, US doesn't want to be that generous.
Yeah.
And so all this, whatever was supposed to be rule-based, multilateralist stuff, it was in a way being managed by few people against, at least today America feels that it was against America, and that's where this portion is over. So what next? And for me, when the unipolar world, which was America from 1987 till now, if it's going to go away, what will happen? What we can visualize is today, there are going to be multipolar situations. America will be there on the table. China will be there. Europe, if it remains together, might be there. India will be there because it's now the largest country in the world, largest democracy, but also a reasonably decent sized, almost third largest economy in the world. Today it's fourth, but probably this year it will become third.
Yep.
And so effectively you will see multipolarity and more bilateral activities rather than multilateral activities.
And we love describing this, don't we, as having a seat at the table. Is it fair to say that there may be more tables with smaller seats? Smaller tables, smaller seats, but you have a player and you choose which table you are sitting at.
Everyone will try to choose. At the same time, the largest table is America's table for foreseeable future. And you need to be on that side to just be aware.
But will you have to be at that table, or can you be in the same room and doing deals with that table?
You can try that, but if you are not on that table, you are going to go very far. And again, like yesterday, China announced 34%, and then President Trump announced additional 50%, which makes it 104% duty on China. So for me, the things are becoming very, very volatile, very uncertain, and you will have to, in a way, select sides. China doesn't import nothing from nobody, doesn't want to, right? And while America is still open. And so you need to figure out whether you want to be with somebody who wants to only take money from you, or you want to be with somebody who is actually better. And that's why I was speaking at one of the European conferences last week, and I said that America and Europe are trying to be at loggerheads like brothers, having insulted each other. And sometimes brothers' insults look much more tougher than going with enemies. So in some ways, Europe is trying to go with enemy. It will be actually a big mistake if they do that.
And amid that, you might argue, there's, while those two squabble, and while they fall out, and while they have their war of words, there are opportunities. And I wonder where India fits into this picture. What will India look like in this new world order?
No, India has always not been a large beneficiary of multilateral trade world. In fact, the WTO is largely about goods. What India has worked on is the services part, which is not part of the WTO framework in some ways. And that's where India was never a large beneficiary of multilateral world. And so when it's going away, India will have to find its own ways. At the same time, the technology part, which is coming up, which is going to be the world's future, is not easy to tax. Most of the wealth is going to be basically what I call non-material or dematerialized. And most of the wealth is going to be of experience, which is not easy to tariff. And that's going to be very interesting over the next 30, 40 years. 80% of the wealth is going to be non-material. What we are currently tariffing is actually the material world. So there is going to be a sort of a direct shift, and India is a beneficiary because most of the world's experiential stuff, whether from banking, to pricing of derivatives to even virtual realities or artificial intelligence, everything, whether it is by American companies or Korean companies or European companies, are actually being made in India by their global capacity centers. Almost today also you announced several global capacity centers, but more than 2,500 global capacity centers are existing in India from the largest companies, and sometimes they have more employees in India working than their parent country. And why? Is because India is giving you that talent which is able to visualize the future and create that wealth, of course, for that country which owns the GCC, but also for India going forward.
I want to talk about capital markets because quite clearly your area of expertise as well, isn't it? Talk to me as well about, what that turbulence means for capital markets here, because, we talk about investor confidence. The Chief Minister just saying there, investors still believe in India, investors are bullish. Do you share that optimism?
Absolutely. In fact, if you've seen last couple of weeks where things have really gone topsy-turvy in the world markets, markets have fallen even in US by 12-15%, and now they're running at almost a recession sort of framework, which is 20% down.
Yeah.
India has done remarkably well.
Yeah.
Yesterday also when Hong Kong went down by 13%, India was down 3.5%.
Yeah, why?
It's because India has its own growth momentum. Even this year, that is the financial year started April 1, we are going to grow at somewhere between 6.5-7%. It's going to be the fastest growing large economy in the world. And large portion of India's growth is from within.
Yeah.
And that's where there are a lot of bridges and ports and airports and roads and everything is getting constructed. That's the infrastructure push by the government.
Yeah.
But also many more industries are being set up. In fact, in the new world order that is taking shape, India is going to play a very significant role going forward. And that's where, again, many more people will come. The other part is also interesting that most of wealth, if it is going to be exponential, it doesn't require a lot of capital to be invested. It requires some amount of capital, but a lot of brains, a lot of exposure, and a lot larger markets, right? And Indians are now coming faster to the listing space, listed space compared to the rest of the world. In the rest of the world, there is a tendency now, especially US and Europe, where large companies actually go private to the private equity, private capital. Whereas in India, large companies go to markets, and some of the largest companies in the world, like Hyundai Motors, last year in November 24, listed its subsidiary in India, $3.3 billion they took away. And this year, LG is going to list, but probably Walmart subsidiary will list. And similarly, many other foreign companies, which are the largest in their countries, are going to list their subsidiaries in India. So you can see they know that Indian market is going to give them better returns. It's actually a larger market and very growth oriented.
It's not without risk, though. There have been some amazing success stories of listings. There have been some flops, to say the least. How do you sort of even out the highs and the lows there? And I wonder, what is the rationale? What is the reasoning for that? Why do some fly when they list here? And some
basically, it's a free market. So the companies come out, their merchant bankers or investment bankers tell them that this is the price at which you can sell. Exchanges or the regulators don't have a say at what price they want to sell it at. They can only prescribe the disclosures that the companies need to make. And some of the companies may not have estimated, or their investment bankers may not have estimated the future well. And that's why after listing, they may not do so well. But many companies actually are aware that they need to put some money on table before the list. And that's where after listing, their performance is better. So in a way, exchange doesn't have a view on prices going up or going down. Our way is to give you a framework to disclose all the requirements, and it's up to the investors to whether they want to invest in your company when you do IPO or not. And that's how we look at it. India is, in a way, a market where many companies come. Most of them are successful. Unlike, say, in last 7-8 years, 400 Chinese companies came to American markets and took away $400 billion of investors' money. Many of them did not even have addresses, let alone a business model or a factory. But they took away $400 billion and nobody cared there. Whereas in India, we tend to be very, very sensitive to smallest sort of infarctions by our companies.
And neatly, that gets me onto a final thought, because our time is up, but regulation, just a word on, where are we on regulation here? The right level, would you like to see a relaxation in the regulation to allow some of those, not maybe to the extent of what we've seen in the US, but that would free up a lot of capital, wouldn't it?
No, broadly speaking, Indian capitalism is what I call promoter-driven capitalism, vis-a-vis American capitalism or Anglo-Saxon capitalism, which is what I call manager-driven capitalism, that the owners have at least receded slightly, although they might be sort of appointing the CEOs and give them a lot of money. But broadly speaking, Indian capitalism is owned, it's owner-driven capitalism, where their prestige is at stake. And that's where India is, in a way, more technocentric framework, where Mark Zuckerberg still is a face of Facebook, and Elon Musk is still Facebook, Tesla. That's what I call owner-driven or owner-manager-driven capitalism. India is pretty much that style, and that's where I have a lot of hope that future is about people who come in front rather than run from the background. And Indian regulations are actually some of the toughest. Like America has what we call golden share, which means some people have more rights than others. Similarly, they have non-pari passu shares, which is again, some shares have more rights than others. India, pretty much today, all shares have equal rights on the companies. Even disclosure standards are much harder, much tougher than what US, Europe has. And even if a company's management has a stake or an interest in a particular resolution, they cannot even vote on that resolution. That's where what we call majority of minority. So we have evolved to ensure that the conflict of interest or asymmetry of power and asymmetry of information vis-a-vis promoter manager and the minority shareholders, we have tried to resolve, and that's where more people are trusting Indian capital markets today. I have 210 million accounts which we service across India, and 110 million unique investors. If I were a country as NSE, I would be around 14th largest country in the world, given my number of investors. India has 20% households, which now save through stock markets, larger than France, Germany, and many European countries. Why I'm telling you this is, India has now grown to trust its entrepreneurs, and it has got that confidence that future will be much better. And entrepreneurship is what gets you more jobs, and of course, that gets you more prosperity.
Yeah, we're going to pick up on that in our next session, actually. So there's a really good grounding there, a really good basis for us to discuss. And the question about Elon Musk being so involved, so publicly involved in Tesla is for another discussion, isn't it? Really good to have you here. Thank you for your time this morning. Ladies and gents, please welcome Ashish Chauhan. Thank you so much.
Thank you.
Good to see you. Thank you.